Hey guys, Boris Schlossberg. Welcome to our weekly Forex technicals for 11:25, 11:30 for BK Forex. As always, shooting foreign exchange and margin carries a high level risk may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand a little bit of social trading and margin, to seek advice from a financial advisor if you have any doubts. Well, it's definitely been a week for the yen, and dollar yen was, of course, the key breakout here above the 150. And now taking very, very close aim at 101.50, which is really the final barrier it needs to overcome before it can try to make this run to the yearly highs at 103.50. There is tremendous amount of upside pressure now starting to build on the unit. The critical question, though, however, is probably going to be U.S. data for the next several weeks. If we get a drumbeat of positive U.S. data, the power behind this move is just going to explode to the upside, because the consensus in the market is going to be that the Fed will taper in December. The better the data gets. Of course, the NFPs on the early December are probably going to be the determining cause. But in either way, if you get this kind of projection trajectory, the dollar yen could project itself all the way out to 105 before the year end, as it starts to build out this format. On the other hand, if we start to stall out here and kind of fail for the second time at a 101.50, the immediate support is, of course, 100, but the support below that is going to be 99. Still, given the structure of how the trade is setting up, unless we have radically different expectations of how the U.S. monetary policy is going to be constructed, that is, unless the market 100% changes its tune towards a much more accommodative policy that is going to depress interest rates, all signs point to a much higher and bigger upside in dollar yen. If you take a look at the weeklies, you can see how on the weekly charts here we've sort of really consolidated this W formation, and we're now coming up really at this crucial point of whether we can break out of this W double bottom that could then, of course, lead us to fresh yearly highs. So very, very interesting structure. On the weeklies, looks quite bullish. You got the wick at the bottom and a close pretty much at the weekly highs and at multi-week highs. So a very, very strong trade here. The best cross on this particular trade has been, where's my pound yen? Has been pound yen, which broke out. We know we talked about this a while back, that we looked at 62s as the fresh yearly highs, and then of course this massive breakout towards the 65s effectively. At 65 now, very, very much in view. If we get any kind of modest up move on Monday or Tuesday, 65 is most certainly going to fall by the wayside. Beyond that, though, it may begin to stall out a little bit. But this is a kind of a parabolic takeoff, and especially if you look at this 1-2 week combination, that suggests further upside ahead. Certainly on a daily basis, also quite a very powerful move here. After consolidation, very, very strong move. And 65 is clearly the target of the longs now as we move on. Euro yen also looking quite good. Euro yen also fresh yearly highs, took out the 36, which was the very big resistance level. Let's take a look at the weeklies here. And on the weekly charts, again, through the 37s. Now, of course, Euro yen is really going to be the big number that everybody's going to be watching. Is going to be the 140, whether it's going to be able to extend all the way out there. But both of these charts are just showing massive breakout potential in the yens, and I think that's going to be the big story pretty much into the close of November, beginning of December, as everyone focuses their expectation on a tightening Fed and a looser monetary policy in the other G4 nations. On the majors itself, the euro continues to, I think, be much more surprisingly resilient than most people think. This is a excuse me, it's a weekly chart where we're basically finding support around the 34s, and we have started to recover off of this massive correction that we had off of the 38s. And overall, on a weekly chart here, you still have a series of higher lows, which bodes well for the pair, and essentially preserves the uptrend in place. On a daily chart, the chart looks even better, although this is a really, really critical point. On a daily chart, you basically had this more or less engulfing candle here a couple of days ago that we have managed to practically erase. And this is where I think it really becomes a very, very important juncture for the euro over the next week or so. This level of 35.50 to 36.50, former support, now resistance, becomes a crucial battleground technically. And certainly the first pass at this level suggests that it's probably going to stall, and we're probably going to come back, maybe back to the 35s, maybe back to the 34.50s. Euro has been seriously supported by one factor only: the much better than expected German economic performance, which is the only thing in Europe that continues to drag the economy forward. And really, until and unless Germany starts to stumble, European monetary policy is going to be more restrained than it would be otherwise. Certainly much more restrained than what the periphery nations really would like, which is why you had the denial of the negative interest rates and a sort of a more sober outlook by Mario Draghi, which is what's given Euro all of this potential upside propelling, basically. But as I said, we're coming in now to this incredibly crucial area here between 35.50 and 36.50. And generally, when you have so much chunkiness, so much resistance at these levels, it's difficult. It's not impossible, but it's difficult for currency pairs to kind of barrel through here. So we may make a run at 3,600, but I think that is probably going to be a near-term exhaustion point and some consolidation and a little bit of a correction probably is going to be due, as it's going to attract some sellers. Having said this, though, the euro certainly is acting much more resilient than most people thought. This head and shoulders broke and then came right back. And generally, and this is the other thing that I think is interesting to note, when you have a technical pattern that fails, sometimes that gives you the single best signal the other way. Because a failure of a technical pattern, a failure of this head and shoulders to really actualize itself, suggests that there are more powerful forces on the other side of the trade that could create a pretty serious short covering move, given the fact that so many people were convinced that this was going to be a much deeper correction in the euro. So the higher we go, given the fact that you could squeeze yourself out. But in the near term, I think we need to watch this 36.50 zone as a potential zone of resistance in the euro. Cable by itself also looking quite good. Cable really now coming up to this really big point. This is going to be either a triple top failure, or we blow through this and the next level of resistance is going to be close to probably 64. So let's take a look at a much longer term chart. This is the monthly chart, right? So on the monthly chart here, you can see that the triple top resistance is around 62.50, 63s, right? But the next level really doesn't come up till about 65, 66. So if we clear 63s, 65 really comes into view as a potential trade in the pound. This is a very long term. A monthly chart of the pound also looks like it's just doing a terrific job of consolidating. But this is, if you look at this on the weekly charts, a really important level, and it's failed here so many times that really you almost have to have it take out pretty much the highs at 63 in order to have some level of conviction that it's on its way towards fresh highs. We don't have too much data next week. Next week is a very quiet data. And North America is going to be pretty much off for the rest of the second half of the week. So it'll be interesting to see if we get any kind of powerful movements. Now, the last currency pair to look at this week, and one that I think, of course, went its own way, completely opposite way, was Aussie. Aussie got shellacked by the threat of possible intervention from the RBA. Although I think the RBA really delivered its made its purpose known without having to really do anything. Just the mere threat of intervention was enough to really push the Aussie all the way to lows. And the Aussie, of course, underperformed against everyone very badly this week. But now it comes into this a little bit of a support area here, this 91 area. This 91.90 area is certainly a little bit of support. The really steep support is around 88.50. So it's possible that we may be exhausting ourselves on the corrective phase here. You see, this is former resistance, now quite likely to be a little bit of a support in Aussie, for nothing else than just simply short covering, a little bit of bargain hunting in all of those moves. One interesting trade, I think, if you are in the business of picking bottoms, which is always a very dangerous business to be in, is to take a look at this Aussie CAD trade, because Aussie CAD has a very clear, definitive support here at 96. It's certainly coming into this 96 zone. So if you want to anticipate a double bottom or some sort of a near-term possible bounce, this might be an interesting way to derivatively trade Aussie on a quick short covering bounce. But otherwise, certainly on a longer-term basis, it's a very negative trade because the central bank wants it sold. And generally, you want to be on the side of the central bank when you're trading FX. Anyways, wishing you guys the best of luck, the best of trading for the holiday shortened week. I will see you guys next week. Boris Nosberg for BK Forex, over and out.